day, subscribers. Thank you so much for joining me. Today I am Jeremy. This is the Financial Education Channel, and today we're talking about Warren Buffett. Warren Buffett, the Oracle of Omaha, the most famous, the most successful investor ever probably in the history of the world. This guy is amazing, and he's one that a lot of long-term investors or investment community in general looks up to as like a legend, like a god of investing, right? But as he's gotten older, it seemed like he's gotten much worse as an investor. Those incredible returns he got for 2 decades straight, those started to erode, and nowadays he's just not nearly as respected of an investor as far as what he's doing nowadays versus what he was doing in the 80s, what he was doing in the 90s, what he was doing in the 70s was absolutely amazing, the returns he was getting. So I want to run through with you guys 5 reasons why this seems that way, and 5 reasons why basically it's a lot harder for him nowadays than it was in the past, even though he's probably much more intelligent, he's probably much more well connected, he could get anybody to talk to him whenever he wants, any CEO in the country basically, he's got one phone call away. So you say, you know, he's a lot smarter, he's more well connected, he has so much more information available to him. How did he get worse? Well, let's start off, guys. So number 1. Nowadays, he can only invest generally in huge corporations. We're talking about, you know, companies that have market caps of $50 billion plus. Reason being is because Berkshire has so much money coming in to invest that in order to get any type of substantial return on that money, he really needs to, you know, make billion-dollar stakes in a company. And in order to make billion-dollar stakes in a company, it's got to be a company that's worth tens of billions of dollars, if not hundreds of billions of dollars. Now, the amount of companies out there that are $10 billion plus market cap, or really $50 billion plus market cap, which is what he's mainly looking for, the amount of companies that fit that category are very, very small, guys. There aren't a massive amount of companies. So he went from when he was starting out investing in those first, 20, 30 years, that he could invest in almost any company he wanted. Almost any company he wanted. He had thousands of companies he could search through and pick the very best ones to put his money toward, right? Nowadays, he's got 100 companies maybe, 50 companies maybe that he can actually legitimately invest in and make a big stake in. And then that number goes down even more because some of those companies don't fit the criteria he's looking for. So the amount of companies he has to pick from to actually invest in, it's very small, guys. It's very, very small. So that's hurt him substantially. And that would hurt any investor substantially. When you limit the amount of companies that you have availability of investing in, that limits the amount of money you can make in the long run by a lot, guys. Number 2, he doesn't understand technology. He's admitted this on a million interviews you could watch out there on YouTube or anywhere. He's admitted this time and time again. He doesn't understand tech, which is why he pretty much never invests in tech. He started to a little bit more recently, and he's done really bad on most of his tech investments, like IBM and whatnot. But he does not understand tech. And this hurts him greatly over the last 20, 30 years because guess what, guys? In the last 20, 30 years, the tech companies, most of those are been what has carried the market to huge gains. The tech companies are the ones that have been blowing up. That has been the biggest industry by far to push America forward and by far to push the stock market forward. You look at 20, 30 years ago, you look at the biggest companies in America, the 100 biggest companies. There was almost no tech companies in there. Almost no technology companies were in there. Nowadays, look at it, and the list of the 100 biggest market caps out there that are tech related, it's like half the list is tech related companies, guys. You think about some of the biggest companies in the world as far as market cap goes. Facebook, 300 billion plus. Google, 500 billion plus. Apple, 500 billion plus. Microsoft, 500 billion plus. Some of the biggest companies in the world are all tech related, and this is a sector he's completely missed out on because he does not understand it, and that's fine. Sometimes you don't understand sectors. There's certain sectors I don't understand that well that I don't get involved with. A lot of the banking sector, a lot of the oil and gas stocks, because I don't know where commodities are going, coal, all those type of companies I don't really mess with because it's not in my realm of understanding. And for him, that's tech. But by it being tech sector, that just hurts substantially, guys, because there's so many great tech companies that are on the up and coming and had been on the up and coming for 10, 20 years that he just missed out on huge, huge gains he could have had, guys. Number three thing he has working against him is Amazon has hurt a lot of his big retail names. Walmart is one of his biggest investments. It has been for a long time. And there's tons of other retailers he's been invested in, sold stakes in, or bought stakes in that have been hurt by Amazon. Once again, Amazon's more of a tech-related company, although they're retail, and he doesn't understand Amazon that well. It has a high PE, so he wouldn't touch it. But Amazon has hurt substantially so many of his retail names, including Walmart. So that's held back a lot of his gains he could have had. If Amazon never existed, if Amazon never came along, all of his retail names would pretty much have a lot higher stock prices than they do now. They would probably be a lot more profitable, have a lot more revenue. But since Amazon came in the game and has just really come in and be dominant, it's hurt so many of his retail names, which is another reason why his returns have suffered over the last 10 years. Next up, guys, number 4. Coca-Cola is his second biggest investment. Well, Coca-Cola has been hurt over the last decade by a lot of negativity as far as, not being very healthy for you, Coca-Cola and whatnot. We've known this for a long time, but it really hasn't begun to hurt Coke until really the past decade, and it's just small little slices here and there. A lot more innovation has come in the soft drink category, or basically non-alcoholic drinks. You had energy drinks come in, which Coke has now taken advantage of because they've become a big investor in Monster. But of course, that was way late in the game. They should have done it, 10 years ago, 5 years ago, something like that. But a lot of more drinks are out there nowadays that people are drinking that they were not drinking 10, 20, 30 years ago when he was starting to invest in the 80s. You think about so many big brands out there that you go to your local convenience store and see on the shelves. Most of those did not exist when Coke was around in the 80s and whatnot and coming up, and when he was investing in that. So Coke has been hurt by all these new brands of different types of drinks out there that have come in and just, taking a little market share away from Coke. Instead of someone going to grab that Coke, they go to grab a Naked Juice or go out and grab whatever other kind of product there is out there. Maybe a bottle of water instead, maybe an energy drink, a Red Bull, something like that. Those products weren't around back then, guys. So Coke has been hurt by that, and that's hurt Warren Buffett. Last up here, guys, generally speaking, as you get older, you get more out of touch with what is going on in trends and things like that, guys. Warren Buffett's 86, 87 years old now, guys. It's really hard to be in touch with things that are coming up versus when you're younger and you're in your 20s, 30s, and you're more in touch with, what's the next trend coming out? What's the next style coming out? All those kinds of things. What's the next hot company coming out? It's hard to know that when you're in your 80s. I'll be completely honest. You go to any retirement community pretty much in America. Go there, go door to door, and just ask them. Say, hey, do you know what Snapchat is? I can almost guarantee you every single household will have no clue what Snapchat is. And that's what the company that's pushing an IPO probably within next year is probably going to have a 30, 40, $50 billion valuation, guys. And they're going to be clueless on that. You could have gone to a retirement community 10 years ago and asked them what Facebook is. Facebook? What is that? You know what I mean? And same thing if you go to, a classroom with 5th graders in and you say, hey, what's a landline phone? They'll all look at you like you're crazy. A landline phone? I don't know. Is that some new smartphone company or something? You know what I mean? It's just it's harder to be in touch with things as you get older. I'm 27, and some of the things, and musicians and whatnot, I'm not as in touch as I once was back in high school when I knew all the new hottest musicians coming up. Sometimes I don't know who these people are until they're already big names. Same thing that happens in the investment community. When you get older, generally speaking, sometimes you don't even know these companies. There's companies like Under Armour that Warren Buffett probably totally missed out on. Lululemon, some of these brands that he actually probably understood really well, but he didn't understand it from a standpoint of, is this going to be the next big company or whatnot? Because he's probably just more out of touch, guys. It's really hard to be in touch with things as you get older, That's why parents aren't as cool as kids, right? So anyways, I hope you guys enjoyed this today. Warren Buffett, he's still a legend. He'll even if he did horrible for the rest of his career, and who knows how many more years he's going to even do it. Even if he did horrible, he's still an investing god. If there's a Mount Rushmore of investors, Warren Buffett's on that pedestal. But his returns have suffered over the last couple decades, and I wanted to share with you guys why this is. If you enjoyed this video today, hit that thumbs up button. If you've come across this video and you have not subscribed yet, you may want to. I talk about personal finance on the channel, talk about entrepreneurship. I'm an entrepreneur, and we also talk the stock market the most. I break down stocks every week. Thank you for watching, guys, and have a great day.